Good afternoon, everyone. This is Parker Cox with the MISO team. In just a few minutes, we'll get started with the spring outlook for 2016. But in the meantime, take a look at the agenda. Let's go ahead and get started. First, a quick comment on the gas power synchronization. MISO requested deferral to November 1st with FERC, and with no response from them, we are assuming that this will in fact be the new planned start for the change in the market closure. So now we will hand it over to Jeff, our meteorologist, to start with the winter 16 and spring 15 recap.
So the first slide here shows the temperature anomalies for the winter that was just concluded yesterday. As you can see, a lot of above average temperatures on the graphic there on the right, particularly for the Midwest and the Northeast U.S., which severely eroded heating load over the wintertime, especially compared to the prior two winters. December in particular featured well above normal temperatures, and that was very similar to December of 2014. But as we went further into the winter, January and February, opposed to the previous winter last year, the temperatures never really turned to the colder side, and we saw the warm anomalies continue right through January and February. Peak demand for the MISO footprint was on January 19th, 97.4 gigawatts, and that's nearly 10 gigs weaker than what we saw for a winter peak last year, and again, significantly weaker than even the winter before that as well. So this graphic here attempts to contrast the past three winters. They've been this winter in particular was quite a bit different from the previous two winters. Both of those winters saw what were referred to as polar vortex events centered in the January timeframe, whereas this winter really saw no sustained cold at all for the footprint, and consistent weakness demand-wise. If we look at the graphic here, the winter peaks for each of the past three winters are highlighted. You can see the extremely strong peaks that fell in early January in 2013 and 2014, those winters there, 106, 108 gigawatts. And then we have our 97 gig peak this winter, far below those and slightly later in the season. And then you can also note the remarkable consistency of the weak peaks through the winter, beginning in December and continuing right through the end of February yesterday. And then opposed to the previous two winters, we did not even see any type of late season cold push such as what we saw last year when we were still hitting 100 gigs late in February, where we've been consistently in the low 80 gig range. So quite a departure from the past two winters in terms of demand.
Hey everybody, this is Sai on the MISO desk as well. I'll just mention some details with regard to pricing and some other details as to what happened this winter. Quickly, you can take a look at, you can see where those orange triangles really got their highest levels this year. Really the second and third weeks of January are where we saw our strongest load. And just to kind of put some context into just how weak the winter was, those were our strongest 2 weeks in terms of load, and the weekly real-time settles were $24.69 for the second week and $27.70 the third week. So our two strongest demand weeks, and our weekly real-time settles were extremely low there. Moving on to some other details. This just covers some of the load averages and pricing averages for the footprint over the winter months. And just in terms of one really interesting point is looking at the peak load of the entire winter, which Jeff mentioned was on the 19th of January. You see there that's 97.4 gigs at the ISO level, and you can see what the real-time settled on that day, $24.60 at IndyHub. So despite a peak load, even on a peak load day for the entire winter, we're settling at $24.06. Remarkably cheap, number one, and number two, you can take a look at just how cheap the gas prices were. So even when our load was peaking, our gas prices never got above that mid $2 range at most. So that also kept the lid on prices as we went through the winter. Now we'll hand it back to Jeff to take a look at spring of 2015.
So heading into this spring, we'll take a quick look back at the spring 2015 so that we can contrast it later in the discussion. As you can see with the map on the right, the temperature anomalies were generally slightly warmer than average for MISO Classic and portions of MISO South. Marginally so, 1 to 2 degrees for the most part across the footprint there. In terms of month by month, April saw the warmest above average temperatures for the footprint. March, because of the cold February, saw some lingering heating load just to start the first week of that month, and then by the end of the period, sort of the last week in May of 2015, we started to see the first signs of cooling load emerge for the footprint. But in general, the season as a whole was relatively unremarkable in terms of temperatures, departure from average.
Okay, and then just diving into some of the details of spring 15. One thing I want to mention is that last year, as Jeff kind of alluded to, we did see like a bout of heating load that first part of March. And you can see here that the peak load day for March was 96.9. So number one, that's nearly the same peak as our winter load this year. But you can see what the real-time settled at that day at IndyHub, $58. So blew this past winter's peak real-time pricing out of the water, and that's in March. So that gives you some context to just, again, how weak this past winter was, but also how unlikely it is that we're going to see pricing similar to this past spring moving forward into this spring. Another indicator of that is looking at the average IndyHub real-time settles through March, April, and May of 2015. You see that your average real-time settles were significantly higher than the prices we saw in winter of 2016. So again, that just points to the difference in terms of gas prices and load that we're going to be seeing moving into the spring of 2016. Parker's going to take a look at some of the congestion patterns we saw in spring of 2015.
So we're not going to spend a whole lot of time here, but what you are looking at are the top 2015 spring real-time constraints ranked by the Selmo shadow price. The next slide will be the top day-ahead constraints. But what you'll notice is that most of these are wind and outage related, not necessarily related to like seasonal flow patterns. But now we're going to move right into the spring 2016 demand expectations.
So the first two graphics here are just our expectations for the spring 2016 in terms of temperature and precipitation. We've sort of carried over the theme from the winter time with strong El Nino forcing, driving warmer than average temperatures across what we consider MISO classic, the Midwest, with some slightly cooler than average shading over portions of MISO South. Over the winter, we had sort of a similar split pattern in our forecast. The cool anomalies along the Gulf Coast did not verify as expected. So I think that in terms of risk footprint wide, we may shade back on those cooler than average anomalies there. But given that it's a shoulder season, it should not swing our demand expectations too much. In terms of precipitation there, just expecting a slightly drier than average spring season over the Midwest there with near normal for the most part for MISO South. And then as we break that down into a month by month look here, we've already emerged into March at this point, seeing some very warm temperatures on the horizon in the next week time frame. So that might help steer the month as a whole, particularly for the Midwest, looking for warmer than average temperatures in March there. As we move into April, a little bit of a cooler shading for MISO South, but again, April being the height of the shoulder season, these anomalies should not be steering demand too drastically one way or the other, given it's normally pretty comfortable average temperatures there. We're ahead of the real ramp up in cooling season. And then we get into May, we shade our Midwest temperature expectations a little bit warmer than average, and expecting some cooling load to build back into the Midwest. Last year, for instance, we saw it sort of the last week of May. We may start to see some more robust cooling load emerge a little earlier this year. So that will certainly bear watching as we head into the second half of May there. And these bullet points here are just sort of reinforcing what I went over in terms of the map there. And then just a quick brief in terms of historically the inflection points that occur during the spring. We can see that MISO South sees an earlier inflection point in terms of starting to develop cooling degree days compared to the Midwest there by the end of March, beginning of April there for New Orleans, and then for the Midwest, that inflection point comes a bit later in the shoulder season towards late May there.
Now we're actually going to switch over to the generation outlook for the upcoming spring.
So the graphic here is just a graphic showing the difference in a proxy for Western wind generation and central wind generation. We can see that we see pretty steady capacity factors for west wind generation, or north, I should say, wind generation through the season there. We do expect separation for central wind to the downside compared to west as the season progresses, as sort of that central Midwest wind starts to die off and towards the summer low point seasonally. And the main thing to sort of keep an eye on here is just that look for the potential for a little bit of especially on a stronger load day, west generation staying up, central generation weak, potential for west-east congestion patterns to continue as we typically see this time of year.
Okay, so now we're looking at some generation outage type stuff. Number one, as we move into the shoulder season, of course, we're going to start seeing some units come offline and for scheduled maintenance. Obviously, a lot of coal and gas units are going to be doing their scheduled maintenance. We've already seen capacity on outage numbers jump as we move into the shoulder season, and they will probably peak over April before coming back down in preparation for the summer months. Looking at nuke outages in particular, this is just a list of nuke outages that we have that we're planning on looking at for the spring. This is from Rotex. Obviously, we have some PJM units on there. We include these just because even though they're not necessarily in the market, they're definitely impacting physical flows and will impact congestion in the footprint. So just a few points on some of these things. Number one, currently we already have 3 nuke units offline in the south, A&O, Riverbend, and Grand Gulf. So that, so long as that pattern remains, that's going to help keep a lid on that south and north power balance, just because that's it represents a lot of cheap generation coming out of the stack down there and should help limit that excess, holding everything else equal. Another quick comment, looking at Quad Cities and Byron, those obviously PJM units, but they represent a lot of generation on the source side of that kind of west to east pattern we see moving through MISO Central. So a lot of the congestion we see, which is west to east between Illinois and Indiana, and more broadly Iowa and Michigan. When Quad Cities and Byron come offline, that's going to represent some power coming offline on the source side, relieving that. Conversely, we have Cook scheduled to go on outage. That's a nuke on the sink side of that pattern. So watching those units come and go and how that's going to affect congestion is going to be an important thing for anybody who is interested in that. We also have Point Beach planned to go out. Park's going to touch on that in a bit, just with regard to potential congestion impacts. Moving on, some suspension. We have JR Whiting. So this is a plant in Michigan. Several plants up there, old coal plants up there have been scheduled to go offline for some time now. Initially, the ISO was not going to let them go out because of reliability concerns. They've done some line work on the transformers up there in the 345 kV system, and they've now scheduled this plant and the WEDOC 7 and 8 units to come offline starting the 15th of April. Not a whole ton of generation, really in net, only around 500, maybe a little over 500 megawatts in total generation capacity. JR Whiting is going to be an interesting plant to see go offline because it is right in that kind of that interface region between Detroit and PJM, in Ohio. So obviously we see a lot of congestion. Just recently we've seen some Whiting to Custer congestion. That's actually a great example of how this suspension is going to affect things. That congestion is bearish Michigan hub. It's actually bullish on Whiting. So with Whiting out of the picture, that's an example of where it would be able to relieve that congestion. No longer will be able to do so. So keep an eye on how that affects congestion patterns, and feel free to IM us or call us, and we can kind of talk in more detail about what we think is going to go on there with some of the units going offline. All right, so we're going to move on to Parker, and he's going to talk some congestion and transmission analysis.
So the first couple we have here are, of course, focused on everyone's favorite hub, Indy Hub. The way I see these, they are looking like your low wind scenario and high wind scenario constraints over the course of these outages. The first one we're looking at, Champaign to Vermilion, is the low wind constraint, and the key driver here is Sydney to Bunsenville. What you have here, though, is you still have Bunsenville to Eugene in service, so you still get Indy demand pulling that Clinton Gin to the east, but with Sydney to Bunsenville out of service, it comes across the lower voltage transmission line of Champaign to Vermilion. The second one we're looking at, we've actually caught a glimpse of yesterday, and we'll likely see some more of it today as central wind starts to pick up, but it is Reynolds to Magnetation. Again, this is going to be the high wind scenario constraint over the course of the outage at DeQueen to Westwood, one of the two parallel 345s that carries wind power into Lafayette. The outage here, what it does is it essentially redirects power across this Reynolds to magnetation, leaving the remaining parallel, the Queen to Westwood, as the contingency. The third one we're looking at is just one such example of a constraint we might see around the Point Beach outage. Essentially what you're seeing here is you'll start to see a reduction, with Point Beach offline, you'll start to see a reduction of exports from Wisconsin into ComEd, and at times you'll start to see some of that south to north flow within Wisconsin. This is one such example of one of those south to north flow constraints within Wisconsin. The time we were referring to for this constraint was last fall. If you want to take a look, Point Beach was out of service. I believe one of the Port Washington units was out of service, which also contributed to the south to north flows, which is in an outage there, just as we're seeing an outage on Point Beach, it's not totally unusual over a shoulder month. The one thing I will mention is that not for the duration of the time that this Blue Mountain to Butler was binding, but for portions of it, one of the parallel Blue Mountain to Butler lines was out of service. So now we're going to move into power balance, actually. So what this chart really depicts and what we're seeing here is how power balance transitions from winter into spring and ultimately into summer. Over winter, you have this pattern of south to north flows driven by moderate demand in the south and strong heating load in Classic. Of course, the cheap gas in the south is also contributing to the excess of generation down there, especially considering that the majority of the units down there are gas-fueled. What we see over the spring, though, is as you move towards the summer, is you start to move into cooling load in the south while MISO Classic moderates, with some strong wind remaining in Classic, resulting in an excess of generation in MISO Classic. So you'll see there towards actually the end of May, looking at the 15-day moving averages for power balance from last year, this pattern is prevalent. It looks like just before June, north to south, power balance starts to be the dominant power balance constraint. A couple comments on the changes to power balance, the new definition and the elimination of ORCA that went live on February 1st. The first thing we see is, of course, they've raised the thresholds from 1,000 megawatts to 2,500 megawatts for south to north and 3,000 megawatts for north to south. The growing pains of this change were felt immediately. The ISO, in the first few days or so, failed to accurately capture this congestion in the day ahead, resulting in strong real-time power balance congestion. The other thing worth noting is the sensitivity of the demand curve. They really don't give you a lot of room for error before you're kicked into the potential of $500 shadow prices on this power balance constraint. Only a couple hundred megawatts or so, really. So that was seen in the most extreme cases in the first few days of it, but we're still seeing some of that sensitivity. The chart on the bottom is just some quick stats of the power balance for before and after the change. What you'll see immediately is that, the count is down. The power balance is not nearly as prevalent, which makes perfect sense. When they raise the threshold, we shouldn't see it as much. But as I mentioned before, it seems to be more sensitive at the higher end. You'll see the average print for power balance is actually higher since the new definition, and of course the actual shadow price is higher. Although that 957 reflects just the south to north power balance without the ORCA shadow price. Keep in mind this is the day ahead power balance results. So just to leave you with a couple takeaways from the outlook. The first thing I wanted to mention is how the demand expectations relate to this power balance. with a cooler than average MISO south and a warmer than average MISO north, you'll actually see that that oversupply of generation in MISO classic hit later than it usually does. So we're thinking that actually delays the onset of the seasonal north to south power balance.
The other thing you want to keep in mind is that obviously everybody has realized that gas prices are very cheap. Nothing on the radar suggesting that level of price depression is going to change. Really, some comments from our gas vertical within Genscape, everything they're looking at suggests continued bearish pressure on the prices. Gas inventories are at all-time high. Production just hit a new peak. So nothing on the radar suggesting gas prices are going to be moving up. Obviously, that's going to keep a lid on prices moving forward.
Just wanted to comment on the two constraints I was talking about previously. We might be seeing some very weak gas prices result in a weak, few months ahead of us, but we still have some congestion. Most notably at Indy, under both high wind and low wind scenarios, the outages there are going to result in bullish Indy congestion.
The other thing we want to mention is that despite the fact that we are seeing pretty cheap prices and limited kind of volatility at the hub level and also just in terms of marginal energy prices, we continue to see a lot of opportunities for day-ahead real-time congestion arbitrage. There's a lot of between shifting wind patterns, shifting demand patterns, we continue to see a lot of over-modeled congestion in day-ahead and under-modeled congestion, resulting in big spreads between day-ahead and real-time shadow prices. So there's a lot of opportunity out there for virtual traders. That's something we're working on a lot at the desk, at Genscape desk, so feel free to give us a call or an IM if you want to talk about that. Other thing we wanted to mention is just that ongoing MISO north to MISO central congestion pattern. Obviously, that's probably the most dominant pattern in the footprint. That will continue as we move through the spring season. Wind generation will honestly remain strong, especially in MISO north. That'll remain strong through the spring while that MISO central wind actually starts to tail off. That's definitely going to help bring in more of that bearish min-hub, bullish ill-hub congestion. Whether, there's a variety of constraints that pose that, all of which generally are going to have the same broad impact on MISO north, bullish on MISO central. So that pattern should continue as we move through the season.
So now we're going to open it up to questions, and we'll be with you in just a minute.
Hey everybody, so we've got one question, pretty good question. So here it is. Given the, and I'll have Parker answer this. Given the increase in limits of the new power balance, they're very similar to Orca limits. How come we are seeing this new power balance bind it with such high frequency relative to the frequency we saw Orca bind at?
That's a good question. Here's our interpretation. In the past, the market started getting constrained at exceedances of 1,000 megawatts. Orca only hit in an already constrained market when the exceedances hit 3,000. What this means is that it is very likely that a completely unconstrained market, surpluses would have well exceeded that 3,000 megawatt threshold.
Yeah, so basically, previously under the old regime, Orca was very hard to get to because once you hit 1,000 megawatt excess in MISO South, you started getting those flows dispatched against by the ISO, by that power balance. Now we don't have that preliminary level of resistance, and so we're going up to that 2,500, that 3,000 megawatt threshold much more rapidly than we had in the past. That's all we have for today. Feel free to give us a call or shoot us an IM at any of these emails, names or numbers.
Also, do not forget to register for the Energy Forum, Genscape Energy Forums in Chicago, April 21st through 22nd. Go to genscape.com for any more details. Thanks, everybody. Have a great day.